welcome to Free World Investing. Today we're going to be going over the average true range indicator. Now, the average true range indicator is much like it sounds. It really just gives you the average range over a period of time. The default here was 14. So right here, for example, the average range movement for the past 14 periods, and I'm on days right now, would be 82 pips. And of course, this works for options as well, such as stocks. You could do the same thing with stocks like Netflix or whatever. And here's this one's 85 down here, only 70 pips. So for the average 14-day period for the past 2 weeks, right there, that would be a 70 pip range for those days. Now, what's really cool is you could take this and I could be like, boom, I could hit format and say I want to know what's been the average range for the whole entire year. I just hit 365. I don't have to add it up, and I can see right here that the range has been going down. So it's been going down for a while. I guess this one had an influence. This range probably had the biggest influence in a while, and what that the highest from right there which would have been in June, and right now I'm in January, so it's been quite a while. That was the average range was about 90 at that time for the year. Then at the height, for at least as far as we're saying, that's 90, and now our range is down to 86. And that just shows like that's not really a huge difference, but you could check the volatility. I could even go back for a month and check how volatile it's been for the month. I could just go hit format, go to 30 days, and of course, you could do this for all different time frames and all different ways. But it's a good way to really get the most out of this indicator if you decide to use it. And it is kind of an interesting indicator to use. See, like look how far down it went for the 30-day average right there. That's a good about 3 pips. Now, I feel like this is actually really best to use on stocks, but I mean it's super interesting to use on forex too. It saves a lot of time. Like we can see right here, like this is a good measure for volatility, and we can see the volatility just continues to go up. And it just and we can see right here the volatility has been going down. And this really has no bearing on the actual price itself, but what it does help you do is it helps you maximize your trades if you're trading within a certain time frame. So say for instance I was trading on this day, and I only traded just to make it simple, I'd only traded one at the time, and it opened at 353, and I got that. Say I would have been looking not at this one, but for the previous day, and about 12.50. So I would already know if I have gotten like over $12, that range for the day, and if I was closing out the trade for the day, that if I had already gotten $12, that's about as most as I'm going to get for that day. So it's a good way to look at it, and to see within a time frame how far a certain trade could go, and it's a good estimate to use. This is also really useful. If you're using binary options, it's very useful to use in binary options. There's a lot of different ways that this indicator can be used. Just the study as a technical indicator is very useful. But that's about all I'm going to cover with this today. If you enjoy the video, please like and subscribe. and make sure you check out my other videos. Y'all have a good day.